In this video, I'm going to talk about a scenario that I had. It was a discussion with a coaching client. Unfortunately, I didn't record that particular session, but the scenario was, and this is a common question that I think a lot of people struggle with, and I remember going through the same issues myself, and it was, what do you do or how should you approach trading certain trading sessions? Like, which session do you want to trade? The London, the New York, or the Asian session? So I'll give you my thoughts about the Asian session. I'm not saying that there are not ever any opportunities during the Asian session. Occasionally there are, but I don't usually trade during the Asian session. I'm here in California, so this is a really good discussion because it'll help you figure out what hours you should be trading regardless of where you live. And this conversation came about with this coaching client because he had made a change in his lifestyle to wake up. He's on the East Coast. So he made a decision to wake up at 2 o'clock in the morning. Prior to that, he was waking up at like 5:30, 6 o'clock. So he decided that he wanted to try and wake up at 2:30 in the morning and trade the London session. And then I warned him and I told him, it's not going to be it's just not possible that every London session at the open are you going to get a trading opportunity. It may set up a trade and sometimes there'll be some activity, but I've looked at the data from all of my trades for 22 years and I see that my best trades and my biggest trades usually occur during the New York session. Now I remember I think it was FXCM years ago did a study and they looked at and they compiled all of the trades from their clients, and they said that most of the winning trades that people had, even if they ended up blowing up their trading account eventually, but most of the winning trades that they saw go through their order desk, their trade desk, those took place during the New York session as well. So you'll do better if you just simply eliminate trading during certain trading sessions. The issue is that if you do that and you pick, let's say, the New York session, and then, a day or two goes by and everything's as you expect it, and then all of a sudden you wake up at like, I don't know, let's say 5:30 New York time, East Coast time, and you see that at the London Open, right on that first 30-minute bar at the London Open, there was a pretty significant move. And then for the next 2 hours after that, it just kept going. So you miss like a 40, 50, 60 pip move. And then during the New York session, it goes sideways. That will happen every once in a while, but it doesn't usually happen. It usually works out that you get bigger, better trades during the New York session compared to the London session. You just have to be prepared for the fact that every once in a while there's going to be some kind of activity during the London session that could create a big move. And if you select and set up some office hours, right? Let's say that you tell yourself, okay, if you're on the East Coast, you're going to wake up at 5:30. That should be sufficient, right? Because at 8:30 New York time is usually when we see U.S. economic data. And that's what usually creates some pretty good opportunities. So I'm going to show you the economic calendar. We're going to review what took place today and tomorrow. This is exactly what I did with this coaching client. I wish I would have had it recorded. But again, we walked through why it's probably better for him to just eliminate certain sessions, focus on one, and accept that there's going to be some days where he's not going to get the trades that develop during the sessions he's not awake or doesn't trade, which is okay. There's nothing wrong with that. You just have to be emotionally and mentally prepared for that possibility and say, these are my office hours. This is when I come to work. I know that over time I'm going to do much better. The other issue is during the New York session or during the London session or the Asian session. And some people will argue. I'm not saying that it's like this every single day, every single hour. That's not what I'm saying. There are these occasional instances where things work out really well, but you generally see a lot of choppy behavior, and you could do well by just sitting it out and not trading during the London session and waiting for the setup during the New York session, and then it takes off. I'm going to show you exactly what I mean. And today and yesterday, it doesn't represent the entire year's worth of trading. I'm just giving you a small sample. But what I am saying, though, is that FXEM did a study. They did show that the New York session was much more profitable for people. And in my own trades, with my own trades, the bigger trades and more of my winning trades develop during the New York session. So there are cycles where I only trade the New York session because I know I'm going to do really well and I'm still going to end up with over, let's say, 10,000, possibly even 20,000 pips for the year. My minimum goal is to go after at least 10,000 pips a year over the course of the entire year. But generally, I can close in on maybe about 20,000, sometimes even close to 30,000 on a really good year, especially if I'm really focused. Again, that is also as a result of me eliminating trading during certain hours. So let's get to it. Let's get started with what happened. We're looking at the euro dollar. Now, I'm going to switch to the pound dollar because it's going to make a lot more sense. No, let's not do that. Sorry about that. The euro dollar. So one of the first things that I tell everybody is that if you're going to day trade, you want to pay attention to the economic calendar. All right. Now this is set up with California time, and you want to make sure again that it's set up for you. You can just change it by clicking on this button here, and it'll give you an option to select if the time isn't registering your local time, and then you can set it up so that it will, and then you'll know exactly when these reports are going to come out. Now, I'm going to review what happened yesterday as well, which was Wednesday. But today, if we take a quick look at it, I'm in California. So at midnight, 12 a.m., that's when the London market starts. On my charts, it is the 10 o'clock bar. And that's this bar right here. That's the first 30-minute bar at the London Open, which is midnight. So that's from 12 to 12:30 in the morning. That's what I see. I wake up at about 11 o'clock at night. I go to sleep really early during the day when I do this, if I'm trading during the London session. And this is the kind of behavior that I expect to see during the London session, sort of sideways. This is a 30-minute chart. Some people would argue and say that they would go down to a 5-minute chart and might look a lot more active, and it certainly would, but it's only going to be 8, 9, 10 pips. I don't want 8, 9, 10 pips. I want moves like this. These moves don't happen every day, but I do want a move that's going to pay me 20, 30, 40 pips. That generally happens, and it's usually something that I can get out of the pound dollar on most days. Again, I'm not saying that this is representative of what you would expect and what you're going to see every single day. It's just not true. The markets move in phases and in cycles, and the markets will react due to economic data, certain conditions, wars, elections, statements, waiting for people to make statements, whatever it is, FOMC, all of these things. All of these things can have an impact. So before you sit down to trade, you want to make sure that you are looking at the economic calendar, and you need to write these out. Because if you're going to trade during the London session, and you want to know what's available during the London session, well, if we look at this economic calendar from the New York market starts right around here. This is 5:30 in the morning, California time, which is 8:30 New York time, and that's usually when we get economic data. Now, the stock market opens at 9 o'clock, but what I'm looking at here is when is economic data for the United States made available, which is 5:30. So I'm in California. If you're on the Pacific coast, I can wake up comfortably at, let's say, 4 o'clock in the morning, maybe even 4:30 if I want to trade, and I can miss the London Open because generally there aren't too many opportunities there, especially if I look at the economic calendar and I can see that from 12 o'clock until 4:45 there isn't really anything that would have an impact on the markets. The only thing that could potentially have an impact on the markets by looking at this calendar would be, let's say, a statement from a Fed official or a bank official. So I know last night by looking at this calendar that I don't really have too many options. Nothing really jumps out that would be a good trading opportunity. Sometimes we get economic data out of the UK, and it happens at 1:30 California time, which is 4:30, New York time. But this wasn't anything that was likely to create an opportunity, nothing that the market was likely to react to. Knowing that this is also a rate decision out of the Eurozone, if you're brand new, you don't know too much about it. But if you've been trading for a while, you know that that's a possible price mover, right? We know that that could potentially cause price to react at 4:45 or 7:45 New York time. And then 45 minutes later is the press statement. So many of you have been trading with all of these guys, Draghi, Trichet. I remember watching Trichet. It was awesome to watch the interest rate statement make a move on the euro dollar. The market would react, and then Trichet would come out, and you know that he's prepared. You know that they can move the markets with their statements, and then he would drop statements and answer questions in a specific way that would cause the euro dollar to move in the complete opposite direction. And it was a lot of fun. A lot of people got burned if they didn't know what they were doing, but you need to know what you're doing or you shouldn't be trading, right? You practice and practice until you know what you're doing. Then you start trading. Usually people do it the other way around, but we'll talk about that in another video. So we know here, I know that I can sit it out and wait until about 4:30 in the morning, maybe even 4 o'clock, get ready, take a look at what happened while I was sleeping, and be prepared for this announcement at 4:30. Let's take a look at the chart. So this is midnight. This is 12:30 to 1. This is 1 to 1:30. This is 2 to 2:30. Sorry, that's not right. So let me go straight to the 4 o'clock candle. This is the 4 o'clock candle right here. That's 3:30, there's 4. That's the 4 a.m. candle. So that's 4 to 4:30 in the morning California time, which is 7 to 7:30 New York time. Nothing really happens here. It's a 30-minute chart. So if I'm analyzing the markets and looking for accumulation, distribution, looking for opportunities, counting the waves the way we typically do, this whole process starts with last night looking at the economic calendar and then determining that I could expect that not too much is going to happen because the market's going to be waiting for this. So again, here is that 4 o'clock bar, 4 to 4:30, and then this is the 4:30 to 5 o'clock bar, which includes the 4:45 rate announcement. So you can see that we're really going nowhere. You know, I'm kind of watching to see if price is going to go any higher. I wake up at, let's say, 4 o'clock. I realize that from the start of the London, it really didn't do too much here. And I'm not going to go down to a 5-minute bar chart and look for opportunities because I can calculate the range. If I look at this high, that's 0.917, and that low right here where I'm drawing these support levels is 0.902, barely 20 pips. I'm not going to try and trade that inside of that range, especially if I'm going to hold on to a trade that may put me slightly negative if I get into it during, shortly after the London opens, knowing that there's going to be a big rate announcement like this that could offset it and stop me out prematurely where this could have done that. Let's say I went short and I was holding, but this freaked me out, right? It spooks me, and I close out the trade because it spiked to the upside and then slammed right down and closed at the low. That was the reaction with the news. So I don't want to be on the wrong side of that. Just stay out of the way. You know better than that. If you've been trading long enough, we know better than that. Resist the temptation to get in an hour or two before a major interest rate announcement. Like that just doesn't make any sense. Same thing with non-farm payrolls. We know that the spikes can create these opportunities where people get cleared out or get scared prematurely. They close out the position if they can, and their broker's allowing the data, and then it'll go back down in the direction that they expected it to, and then they're mad because they can't even participate in the trade. So that's what we're doing here. Again, pick your time frames, realizing that certain sessions are better than other sessions, period. And I don't mean day by day. What I mean is over time. You do this for a month, you do this for 3 months, 6 months, 12 months out of the year, you're going to do better trading during the New York session. So again, this develops closer to the New York session. And I'm going to show you yesterday's price action too. Today is Thursday. I'm going to show you Wednesday as well. And then we're going to look at the economic calendar for Wednesday. So again, here's the reaction. Waiting, not having, you don't even have to jump in the split second that the news is released. You just wait for the news to be released and watch the reaction. This is a 30-minute chart. This bar closes at the low. This was an unusual reaction here, this pullback, but what was that? So that is the 5 to 5:30 bar. What was at 5 to 5:30? Well, we already covered that. 5 to 5:30 or 5:30 right here is the press conference. So this is what causes it to start moving around some more, and there was also retail sales at the same time. So let's go back over here. Here it is. There's a pullback during that about the time that the statement, the press conference started. So this closes right up here. One thing I want to bring to your attention, you're probably looking at this green resistance line acting as old support. I talked about this in the last couple of videos that I've made. If you go to a weekly chart, you'll see that this area right here, the 1.0885 approximately, is a major support old resistance level that had an impact on price over the past, 8-9 years. So it's definitely influencing price here. And if you go to a 5-minute chart, you can see how all of these bars were holding on this pullback just below this area. So that is another thing. Not only do you want to be aware of economic data each day before you sit down if you're going to day trade, you also want to be, and I say this in almost all of my videos, you want to be aware of, if you're trading off a 5-minute chart, where's the hourly high and low? Is there an ultra high range bar that looks like this one or this one that could create an overall consolidation range and price could react when it gets to the high or the low? What is that? What are those levels? The high and the low. What's yesterday's high and low? What's last week's high and low? What's last month's high and low? You get my point. So the market, a lot of people who do their homework, you don't want to be lazy about this. You're competing with some of the smartest people around. They're going to study to be better than you so that they can take your money. You need to study to be better than them to take their money, or at least not lose money. You got to put out the effort. You got to dig. You got to look. This is part of the homework. This is part of your work. This is part of the job. Finding these key levels of support and resistance to recognize why price is behaving the way it is. Sometimes you're going to catch it. Sometimes you're going to miss it. If you're missing it and it still doesn't make any sense to you, you got to work harder. That's the bottom line. I learned that the hard way. I've been doing this for 22 years. I know that what I'm saying is the way it goes. Every other smart, wealthy trader that manages either their own money or other people's money has to do the same amount of work. If they don't, and what I mean is the same amount of work that I'm describing. If they don't, they fall behind. People outwork them. You know this in any profession. You have to outwork everybody else. You've got to put in more time. You've got to study this. You got to take the time. I made a video a couple of days ago that walks you through how I was able to find this anyway. You got to take the time to go through the weekly, go through the monthly, stare at the charts, take off all of your indicators. Stop looking at indicators. Indicators are going to confuse you at first, especially if your trading system isn't working with indicators, just get rid of the indicators and learn how to read the bar charts like this. I'm not going to get into detail about that. We talk about that in the coaching program. We got exercises that will teach you how to do this. You want to be able to look at the chart so that you can say, what's going to happen on the next bar? You should be able to get to the point where you can determine what's going to happen on the next bar. Or if you're looking at it like this, what's going to happen on the next bar? You should be able to study and work and learn how to read these charts so that you can determine what's going to happen on the next bar. It's a skill that every trader, in my opinion, should master. All the old time traders did it. Anyway, I'll leave it there. So this is the pullback, and here is the reaction after the fact. After the interest rate decision, after the press statement. The press statement, I mentioned that Trichet used to, the interest rate announcement would make it do one thing. Trichet's statement, or even Draghi on occasion, would make it do the complete opposite. And it was awesome. It was a lot of fun. We would take profits where we were supposed to, being realistic about it. You don't want to hold indefinitely. You've got to have a way to figure out where you're going to take profits anyway. It's like, hunting, right? I mean, if you don't have a target to shoot at, then what are you firing for? You're just blindly, you might as well close your eyes. You need a target every time you get into a trade. You got to have an idea of where you're going to take your profits, is what I'm saying. So again, this level, all of these bars, even the 5-minute, we're holding here at this resistance, and then it drops and we get into the trade here, and we're able to trade it appropriately. Now, I'm not going to get into the exit. I've already talked about that in a previous video today that I already put up on the YouTube channel, and we talk about it in all of the homework sessions inside of the modules. How to get out of these trades. What are you looking for, right? I'll briefly just say that if I'm looking at a 30-minute or a 1-hour chart when I get into the trade, I'm going to be switching to the 5-minute chart. Let me detach that. And I'm watching it along the way and paying attention to the 5-minute alongside with my 30-minute or 1-hour chart that I got into it, what I used to get into the trade. And then I can see that these things are starting to reverse. I can see a turning point. I can see when things are sort of changing the direction and where I should probably lock in profits. So another move back down towards 80 and I'm out of the trade. So here we are at this point on the 5-minute chart. You don't want to give back too much of your profits. I see a lot of guys that are really good traders and they get into these trades without targets and they say, I don't have a target. I just close it when I'm ready. And I see them up, let's say $1,000 and then they end up closing with only $500 and they have no way of determining where they should get out of the trade. Here we're using psychological levels, but you already know that if you've been trading with me in the coaching program. Let's take a look at yesterday's. Yesterday we were looking at this on the 30-minute chart. Same thing happened. Let's find the London Open. We're going to do the same procedure. We're going to go through this again. Is it worth trading during the London, or should you wait for the New York session? This is a 30-minute bar. Here's the bar chart. This is the first 30 minutes at the London Open. I'm going to put an X down there. That's it. You can see it moves up and then it stops and goes sideways. Sure, you can argue that, well, it popped up one more time. You could take, what do we got? A high here of 0.830, let's say, to a high of 40 or 45. We could argue all day long there's 12, 15, 13 points. Why would you sit through all of that? Again, what if it doesn't go that far? We're still expecting, if you are a Wyckoffean, if you're learning these principles that I'm teaching you, you understand and recognize that we had a selling climax, automatic reaction. Talked about this a couple of days ago when we were waiting for these setups. Long before this move here happened, this was Monday and Tuesday. And then we saw a spring. And then here's the breakout. This moved out a lot faster than we expected, but here's the spring. Here's the test. It pulls back a little bit. We go down to a 5-minute chart. You could probably see some tests along the way. We're doing that as well. What I'm getting at is that we didn't have a spring at this point. So here's the London Open. I'm not going to take a trade until I see something that resembles a spring, and I know that we're clearly out of the way. I know that accumulation is going to take some time for it to build. It takes time. You have to be patient. You don't trade in phase B. If you're a coaching student, you understand this and you recognize this. We don't trade in phase B. Don't be lazy. Find your selling climax, find your automatic reaction, and draw your line right there highlighting phase A. And then find phase B. And then look for phase C. Here we have phase C, and then the breakout, here's phase D. And then on with the uptrend, phase E. So that's what I'm getting at. Each time we take a trade, we don't really want to take a trade unless we can find the accumulation distribution. One out of the 3 schematics, the primary 2 schematics that we have for accumulation and distribution. And then I have a third one for both. So again, until we see that, whether it's on a 5-minute chart or it shows up on a 30-minute or 1-hour chart, you're for the most part guessing. And it may be that you're trading inside of a choppy consolidation range. And I understand if you're up at midnight or 3 a.m. New York time and you're sitting through 4 or 5 or 6 hours of trades or this kind of activity, you're thinking, I need a trade. I put in 5 hours here. I got to go to work at 7, right? Some people do that. They change their schedules. And I'm telling you, you could end up waiting until the New York session and still find a better trade. So this reversal right here, well, that's the 7 a.m. bar. 7 a.m. to 7:30. That's the 7 o'clock bar, which is 10 o'clock New York time. That's 7 o'clock California time. I'm sorry, is that correct? Yeah. So again, waiting until the New York session, you could get your setup. Here is the spring. Here's the small test. Here's the bullish engulfing bar. You could either wait until it breaks out above the automatic reaction high, which is your consolidation, which it does here, and then trade it with an entry of 0.848. Targeting 50 would be your first level, but that doesn't make any sense, right? It's only 2 pips above. So the next level is going to be the 80, and then the next level beyond that is going to be the 00. We're targeting psychological levels, and you can see how it just keeps going. So again, and I know that this is just 2 days, but I just want to make a point to you that this happens very often. It doesn't happen every time because, again, every once in a while at the London Open, it'll just take off. But that is probably something that you would be able to identify here on the economic calendar. Sometimes there's economic data out of the UK or the Eurozone at 11 o'clock at night, California time, which is, 2:15 Eastern. Now, I know that this is for Japan, but I'm saying that sometimes there are opportunities. Here it is at 11 o'clock. That's 2 a.m. New York time. So this is before the London Open, 1 hour before the London Open, and we're getting core CPI numbers out of the UK. So it could be that on this day, which was Tuesday, there might be an opportunity. So if you're going to change your schedule, but that's going to be hard, right? If you're used to waking up at 4:30 all the time, and then all of a sudden you see this economic report and you're thinking, oh, whoa, wait, maybe I'll look for an opportunity because maybe the New York won't give me anything. You have to make a decision. I struggled with this. For a while. And I would go back and forth, and it was screwing up my schedule. I couldn't get to sleep on time, and then I was exhausted, and I wasn't focused. It's very, very difficult for you to make a solid trading decision, putting on a lot of money on your trades when you're tired and sleep deprived. I remember, and I tell the story every once in a while with and I'm laughing about it, but it was a very serious issue for me. Finally, on a Friday, trading with a weird schedule and not getting much sleep, I started hallucinating, and I thought I saw a spider on my screen the size of a silver dollar. I reached up forward to brush it off, and it wasn't there. There was nothing there. I was that exhausted. I was that tired. And then at that point, I realized I better get out of any position that I was in and not take any more trades. That was finally on a Friday anyway. And then I crashed. I just went to sleep. Don't do that. Like, really, don't do that. Everybody thinks it's funny because Forex is open 24 hours a day during the week. And I thought it was funny too the first year that I started trading. I thought this is going to be amazing. I'm going to find trades going up, find trades going down, and I'm always going to be in trades. It doesn't work like that. It doesn't work like that. You're going to really struggle if you try to do that. And I'm here to tell you that after 22 years looking at the data, plus other people who have done this kind of extensive work and analyzed the information, that it's proven that your New York trades are probably going to produce better opportunities like this for you. So again, the same thing happened here with the pound dollar. There was a move to the upside. Again, that bar right there, that's the 6 o'clock in the morning bar. There's the 6 to 6:30. Sorry, this is a 1 hour. That's the 7 o'clock. And you can see how that one paid off. And you see it did it again. Yes, it's true that every once in a while the pound dollar will take off at the open. It's possible. Same thing with the euro. But you have to make a decision. That's all I'm going to say. And again, this came about because a coaching client was struggling with this. He made a decision to change and wake up really early, and nothing was happening. And he sat for 6 hours before he got a trade. And it happened 2 days in a row. So now he's back to trying to figure out what's the best schedule for him. And this is important because if you're going to make a full-time living out of your trading, you want to select the times that are going to produce the better opportunities for you. Recognize and realize that, yes, you're going to miss some trades every once in a while. But over time, the better trades and the better opportunities, and you know that the world kind of works around U.S. economic data anyway. I am not saying that that's just the way it is. We can see it on the charts. It is just a matter of fact. Yes, we do get trades off of the London interest rate decisions from the Bank of England and Eurozone and whatever might be happening over there. But usually, most of the time, the markets are focused on the U.S. markets, like around the world. That's what they're looking at. So accept it and just kind of try to work your schedule around that. You don't want to get to the point where you're just so tired you can't make solid trading decisions. I remember trying to trade when I was really tired. I was already angry. I was already losing money. There was no way that I was going to make any profits to be able to take care of my family. If that's what you're trying to do and that's what you're struggling with, and at the end of the day, you realized and recognize that you still can't feed your family from your trading efforts, then you're going to have to make some solid decisions and stick to it. And I know I'm kind of sounding like stern, but this is the way that I talked to myself when I made these personal journal videos that I was making for myself. And then I would play them back and I'd say, hey, don't be an idiot. You know better than this. I know that it's tempting. If you happen to wake up earlier, let's say I'm supposed to wake up at 4:30 in the morning California time, but for whatever reason I'm just kind of thinking about the markets and I wake up at 2:30, go to the bathroom, and then I can't go back to sleep. So then I come in and I start staring at the charts, and then I switch to a 5-minute chart, right? I mean, these are some of the mistakes that I used to make. And I'd switch to a 5-minute chart just so that I could try to find something that looked like a trade, and then it ended up being a small scalping opportunity, but I'm trying to find trades that pay me like this, right? 30, 40, 50 pips. Well, that's not going to happen on a smaller time frame, especially when it's choppy and it looks like this during the London session. So what I'm getting at is I was forcing trades where they didn't belong. I was forcing trades and trying to trade when I shouldn't have been trading, and I knew better. You gotta keep some control. You're the only person that can control your time and what you do with your time. It's the only thing you own. It's the only treasure you have. You have to protect that. You have to accept that. And you're here to do the right thing by you and your family. And I'm telling you, it's not just me. It's a lot of other people that have figured this out and a lot of testing that's done. The New York session produces some of the best trades, the bigger trades and the better opportunities. There's less choppiness where you sit through 4, 5, 6 hours of a trade and it doesn't go anywhere. And then the pullbacks are just a little bit deeper, right? How many times you've been in a trade like that where you go long and then you sit through that pullback and then it goes up and you didn't take profits and it drops back down. And now you're thinking, oh, okay, now I'm going to get stopped out. And then it goes down just a little bit lower than you thought. You close out the trade with, a small loss, and then it turns around and goes right back up again. And this is what you want to avoid, that kind of behavior, that kind of thinking, that kind of emotional turmoil. And that'll happen when you're trading in trading environments where this is likely to happen, where it's just going to keep going around and around. You start looking at the New York session and you sit down at 4:30 California time, or 5:30, 6:30 New York time, and then you get your economic reports at 8:30 and bam, it takes off. Like that's what usually happens. Doesn't always happen. We're looking for signs to make sure that we can trade it that way. And then expect the fact that, with the way it moved Wednesday and Thursday, well, Friday might be a slow inside trading day. I recognize that. You got to be realistic and take a look at the charts at the end of the day. I hope this helps.